Hi, my name is Libby Newman and I'm an investment strategist here at Vanguard. Welcome to this month's Investment and Economic Market Update. The big news this month was the 50 basis point rate cut delivered by the US Federal Reserve to kick off its cutting cycle and bring policy rates back down to 4.75 to 5%. The Fed said its outsized cut was a matter of economic strength and its own patience. This was the largest cut in 16 years, but it was delivered in the context of economic resilience rather than concerns about the material slowdown in the economy, which is often the case. GDP is currently around 3%, and Vanguard believes that the US economy is likely to cool but remain at near-trend pace by year-end, probably around the 2% level. Inflation has continued to slow to 2.5%, and unemployment, which is increasingly the Fed's focus, is 4.2%. The unemployment number is driven by an increase in the labour force, not by job losses. We foresee the unemployment rate ending the year marginally above current levels. In Australia, the policy rate remains at 4.35, which is where we think we'll finish the year. In contrast to the US, our latest GDP print here locally was just 1% year on year. And this is the lowest level since the recession of the 1990s. Demand has weakened in response to the RBA's restrictive monetary policy, but the economy's supply side has also been constrained with lacklustre productivity growth, and that's kept inflationary pressures elevated. Our inflation rate on the latest measure is 3.5%, and we don't expect that to fall into the RBA's 2 to 3% range until 2025, which is why our forecast for any rate cuts is also pushed out to next year. The one data point where we are quite similar to the US is unemployment, which is also 4.2%. We also seem to have quite a tight labour market as well, but we expect that the unemployment rate is probably going to rise as a function of financial conditions continuing to tighten. Look on the link to read on. We look forward to your feedback.